Joining us right now to talk about jobs, MacroMavens President Stephanie Pomboy. Stephanie, great to see you.
Thank you for having me.
Thanks so much for joining us. So how would you characterize jobs in the economy right now?
Well, I think he is really onto something here. One thing that I follow, because, I'm looking at all this economic data, and a lot of it is run through the statistical sausage factory at the BLS and other places. The one number that doesn't get touched is income tax receipts. And tax receipts are declining year on year in terms of personal income taxes. They're down 1.5% year on year. So clearly, whatever's happening with job growth isn't translating to income gains. Quite the contrary. So he's definitely got a point there. Also, when you think about, the broader concept of inheriting a mess, this era of 0% interest rates had the effect of basically bankrupting savers, which no one really cares about because they aren't the marginal spender. People are like, whatever. But it's starting to hit the economy now because what's happened is it's creating a logjam in the workforce. The labor participation rate of people 65 and over is the highest it's been since the 60s, and it's not freeing up jobs for all the kids who are trying to get to work after college. So there is a dislocation in the employment market that's been created as a legacy of the Fed's zero interest rate policies.
So we've seen these job creation numbers the past few months, over 200,000, which looks strong, but I think I hear you saying that number has to be a lot higher to deal with that problem. What kind of level of number do we need to see where we can really get excited about job creation?
Well, I think it's more about what kind of jobs we're creating, because you can create a lot of part-time waitress positions and not generate the necessary income growth. And I think it looks to me like you had a lot of people who were forced to take on second jobs or third jobs on the heels of the ACA, where a lot of employers cut hours to kind of fit under the threshold. So you created a lot of jobs in the process, but you add up to the same level of income, which really gets you nowhere.
I think you make a really important point about the ACA. I think that's something that people aren't talking about. That in the new plan, do you think that we're going to see more job growth?
Well, that's the hope.
What policies coming out of Washington?
Yeah, right. Well, first, what's the new plan? So,
fair enough.
Well, when you look at the tax reform plan coming down the pike, we know that's coming.
Right.
We hope in 2017. The health care replacement plan, which you're right, we don't know what the plan is yet.
And it's 2 years.
Do any of these policies to you suggest things will get better?
Well, I have great hope that they will. I've always said that we've got to wean ourselves from this dependence on monetary policy, because borrowing more is not a solution to excessive debt. And, creating real income growth is key. But I think one other aspect of the whole tax cut pro-growth policy that people aren't really focused on is the likelihood, and I hate to say this, but the likelihood that it ends up being neutralized to some extent by restraint at the state and local level. This is exactly what happened in 2008, 2009 with the AARA. We had massive stimulus at the federal level, and belt-tightening at the state and local level ended up absorbing a lot of that. The stimulus is still great. It's better than none at the federal level. But I think the markets are really overexcited about the potential impact on growth, and no one's talking about the state and local restraint.
But industry specific, like if you look at just the medical devices tax, you get rid of that. The medical devices industry lost about 29,000 jobs just in a 3-year period.
Yeah.
And that tax, because it hit revenue and not earnings, the vast majority of those businesses, I think that was like 7% of employment in just that industry alone in the United States. Most of those companies are small to medium-sized businesses, like almost 100% of them.
I absolutely think that getting the weight of ACA, the burden of that, off of small businesses and employers in general is going to be a huge plus. But I think, first off, it looks like it's going to be a 2-year process to get done, and we've got to somehow get from here to there, and that's going to be a little bit trickier.
Do you think tax reform will be a 2-year process?
I hope not. Oh, my God.
Right.
Not like I'm going to benefit from it, but
Would you sell this market here up 15%?
Absolutely.
The market.
I think the market's wildly ahead of itself, and I think the Fed's tightening yesterday was a huge mistake, really ill-timed. I've got a whole bunch of data that tell me that the tone of the economy is going to shift a lot. Atlanta Feds come from 3.4 to 0.9 for the first quarter, and a lot of what we're seeing is a gasoline head fake. It's amazing. Retail sales, which came out on Wednesday, are up 5.6 year-on-year. Ex-gasoline, 1.8. And going down.
Wow.
So,
Yeah,
I
that
mean,
is important,
that's the whole story right now in the near-term numbers is this year-on-year lift we're getting in both CPI and headline consumer spending from gasoline. It's just an illusion that's going to fade.
All right, we'll leave it there. And you said tax receipts are down 1.5% year-over-year.
Personal tax receipts.
Wow.
Yeah.
All right, Stephanie, great to see you.
Thank you.
Love your metrics that you look at. A new way of looking
really?
at
We're
things.
nerds. You're a ghoul.
I like the metrics a lot. Stephanie Pomboy joining us there, MacroMavens.